There is this common narrative among the seasoned investors. The idea is that markets are efficient, that there is no way to time the market, that time in the market beats timing the market. But I don't believe in coincidences. I don't think markets are random at all. Especially the crypto markets. Markets where we don't have a lot of ways to value things are incredibly impacted by psychology. And more often than not, the self-fulfilling prophecy effect kicks in. When enough people think that the asset is cheap, people tend to buy. When, however, enough people think that an asset is expensive, then people tend to sell and not buy that much anymore. So whatever the masses think where a price should go is actually where in the end it will indeed go. And that then explains things like this for Solana. This is the long-term US dollar chart of Solana. And is it really a coincidence that Solana always peaks out at the exact same price of $260? I do not think so. I believe that most people just look at this chart and think at the point in time that the risk to reward for Solana might not really be worth it, and maybe it makes sense to take some chips off the table. And if enough people do this, the price of course goes down. The issue of course with charts like this is that there's a lot of correlation within crypto, right? When Bitcoin is going up, when Ethereum is going up, when Wall Street is buying up those assets, this does have a ripple effect on all of crypto, including Solana as well. And so maybe a better way to look at the situation is to check Solana dominance. How much of all of crypto is in Solana when we compare market caps? And here we don't have a straight line. Here we've got a slightly increasing line. So Solana does become a more important part of all of crypto over time. We peaked at 2.9% in November of 2021, and that grew to 3.8% in November of 2024. Of course, there was a lot of volatility in the process. Solana has a major competitor, and that's Ethereum. And here, the relative valuation tends to increase even faster. Solana outperformed Ethereum over those 4 years by roughly 50%. But let's have a look at the volatility. Let's have a look at those two events. What happened when Solana crashed over here, this red bubble? That was when FTX collapsed. When FTX declared bankruptcy, FTX was a strong supporter of Solana. When that support fell away, people got very scared and thought that Solana is completely done, which in the end turned out not to be true. Because we did have a turnaround. What happened here? Why did Solana suddenly outperform that much? So to be more specific, in November and December of 2023, the answer is meme coin trading. This is the number of deployed transactions on the Pump.Fun ecosystem. And that rose extremely quickly at the end of 2024 to then peak in January of this year. So besides the technical levels, like the resistance that we looked at, there's always a fundamental story behind the price action as well, right? It's the breaking away of a supporter, or it's the adoption of a new use case, in this case, meme coin trading. Which, by the way, is shrinking rapidly since the beginning of the year. The relative valuation of Solana hasn't yet adjusted fully to that shrinkage though. In the early days, Solana was all about efficiency, about very quick transactions, about decentralized finance. That has completely shifted in the last 12 months. It's all now about meme coin trading. Just have a look at the most liquid tokens on the chain. Altcoin is at number 1. Then comes already the token of the Pump.Fun ecosystem, right? That launched just recently, 10 days ago. And all the rest is also pretty much just meme coins. Useless meme coins. One of them is even called this way, the useless coin. Now there's a problem with meme coin trading. Why is Pump.Fun shrinking? Why is meme coin trading going down? It's because meme coin trading is a player versus player game. There are a few winners that make multiple X returns, and there's a vast majority of losers that loses everything. Thus, over time, capital concentrates towards those few winners. The vast majority of people just exit the system, right? When you're losing, you're not going to try it again and again and again. So people churn away. There's a few winners left, and those few winners are not going to trade among themselves that much. And when there are no new people entering the space, then the system simply has to shrink. And that's exactly what's happening with Pump.Fun. And because so many people lost with Pump.Fun, the launch of the Pump token was also a disaster. It was a pump and subsequent dump in its own right. From top to bottom, the Pump token already underperformed Solana by 66%, again in the span of 10 days. It looks like at the moment it's rather Ethereum, not Solana, where all of the momentum is. Have a look at the total value locked change in the last month. Ethereum gained 32%, Solana only gained 16%, pretty much average if you compare the top chains. Meme coin trading is retail trading. It's not Wall Street that's buying the bonks and the Dogecoins and the Shiba Inus of this world. It's retail. But Wall Street is currently generating all the gains, right? Have a look at the Ethereum ETF flows in the last months. It's accelerating massively. And if we annualize the last 2 weeks, we get 18% supply absorption. So 18% of the entire Ethereum supply gets bought up by Wall Street at the current rates, if the last 2 weeks are representative. Bitcoin also sees inflows almost every single day. It's now a supply absorption of 4.3% per annum. Have a look at the balance of Bitcoin that's held by the Bitcoin treasury companies and the ETFs. It's just constantly growing for the last 1.5 years, and there's no end in sight. This is rather an accelerating trend. And so why am I showing all of this? Why am I showing Ethereum charts and Bitcoin charts when this video is about Solana? It's because we're talking about opportunity costs, right? Solana is one of the major cryptocurrencies. It's not going to make a 10 or a 100x anytime soon. It's all about, can Solana outperform Bitcoin and Ethereum? And Bitcoin has a very stable growth path ahead of it. So Bitcoin is very likely going to go up long term. And again, that's not because of retail. And Solana turned into a retail chain, right? It's all just meme coin trading. Wall Street is not buying the meme coins and retail interest is very low. And again, in November of last year, retail interest was high, and this is when the pump.fun ecosystem flourished and when Solana outperformed. Now retail interest is low. It's low for all of crypto, but it's even low for Bitcoin, right? Have a look at the number of wallets that hold at least one Bitcoin. This is going down, and it didn't grow for at least 2 years. Yes, over the years, the capital that's on Solana did grow and the trading activity grew as well. So this is the total value locked on the Solana chain measured in SOL. And yes, the long-term trend is positive. But in the last year or so, we did not see the decentralized exchange trading volume go up anymore. It tends to rather decline again since beginning of the year. And again, we know why. It's because of pump.fun. Don't understand me wrong. I do believe that Solana will hit new all-time highs at some point. It will go above the $260 probably. But I'm not sure if it's going to outperform the rest of crypto. Money is flowing into the system, right? The stablecoin market cap is going up long term. But I think it's mainly Bitcoin and Ethereum that's profiting from those inflows right now. Solana will only be able to outperform really once a BlackRock ETF of Solana gets approved. When the big players are not just buying Bitcoin and Ethereum through the ETF, but BlackRock actually has a Solana ETF and all of that capital flows into Solana as well, then Solana can finally do the transition. Then it's not anymore dependent on retail speculation because that's dying down because the capital has already concentrated. Then Solana can actually get support through traditional Wall Street and get all of those major capital inflows. And so I think the best call to action is just to wait for that approval. We probably have enough time at that point to buy Solana. Solana will not suddenly double in value just because of an ETF approval. The news will get digested slowly. And so once the news come out, we can just buy in and then take advantage of the subsequent appreciation. Now this market is great for some, but not so great for others. People that bought Bitcoin, they're close to all-time highs, but most people that have a diversified altcoin portfolio are actually down. Because here's the problem, returns tend to concentrate in just a few assets. Yes, there are a few outliers that do outperform Bitcoin, but the vast majority, especially of the smaller altcoins, they tend to do much worse. The altcoin market as a whole, since the beginning of 2022, so in the last 3.5 years, underperformed Bitcoin by 74%. And that's just the comparison of market caps. It's not the comparison of prices, because that's even worse. Because the altcoins tend to have an expanding supply in terms of tokens, and that expansion in supply tends to depress prices even more. Have a look at this here. This is my favorite example. This is Balancer relative to Ethereum. That's just on a linear scale, but on a logarithmic scale, it looks very similar. We just have continued underperformance. performance. And the reason for that is simply more and more tokens hitting the market. Either the insiders are selling, the team is selling, the early investors are selling, the users of the platform are selling, maybe because they get some incentive token that they can then distribute. It's all kinds of stakeholders that tend to get tokens over time. And this is not just true for Balancer, this is true for the majority of altcoins that tend to do worse than Bitcoin. And so we can actually flip this around. Instead of buying the altcoins, instead of trying to find the needle in the haystack, the one altcoin that does better, we can flip this around. We can bet on most altcoins underperform Bitcoin. Have a look at this. This is Bitcoin relative to Balancer. So we go long Bitcoin, Ethereum and Solana, and we go short the bad altcoins. Then we can get performance like this. A very nice constant growth chart that is backed not just by hype, but by the fundamentals, simply the insiders cashing out. This is going to stay a valid driving force of altcoin prices for a long, long time. I'm actually making money with that strategy already for close to 4 years. So my performance is this line here in black. And if I had just dollar cost averaged into Bitcoin and done nothing else, I would have only gotten the light gray line in performance. So we don't have to get the 10x or 100x altcoins in order to do better than Bitcoin. This relative valuation here, right? It went up in the last year by roughly 300%. And so I did make a slight change in how to approach those relative valuations. In the early days, I was borrowing something like Balancer, right? I would take out a loan in Balancer, denominate it in Balancer, and then I would swap this against something that I'm bullish on, let's say Bitcoin and Ethereum. And I would just play this relative valuation. The issue with borrowing and lending platforms is that we can't add too much leverage and that we can't really manage our risk with stop losses. On top of that, the asset selection that we get with borrowing and lending platforms tends to be rather low. But with perpetual futures, we can trade many more options. And so I started trading perpetual futures with those relative valuation bets myself. And I did this experiment for 2.5 months. And during those 2.5 months, the performance was very impressive. I started with 40K and moved this to close to 60K again, just in 2.5 months. And I'm sharing all of my trades, right? For example, over here, this was a short on Pengu relative to Solana that I then had to close just a few hours afterwards because Pengu just crashed. And our community made good money with that. Now, many people are scared to learn such a strategy because it's more complex than just buying a meme coin, right? We are going long one thing, we are going short another thing. It seems quite complex and it seems like there's risks that are hard to understand. But that's why I created separate tutorial videos on just that topic. You can just watch those tutorial videos and then learn the trading yourself. Now here are a few trades shared by our community, and it's really about risk management. It's really about setting yourself up relative to other altcoins. Now in theory, this looks all good, right? I made money with this, not just short term, but also long term. But the central question is always, will this apply to anybody that's trying to learn the strategy? And I think that's actually possible. What I will do is when you join this membership here, right, the premium membership, I will share my current favorite trade. And if that favorite trade does not lead to profit after 1 month, then I will refund you 100% of the membership fee. The fee is currently $125 per month. The target is that you become a winning player very, very quickly. So while all of those tutorials are useful for the long term, at the very beginning, you just have to watch 2 of them. And that's using perpetual futures on Hyperliquid and risk management with relative valuation bets. After you've watched those 2 videos, I will share my favorite trade. You just execute on that trade based on what you've learned over here. And there's a very good chance that with a chart like this, you will be in profit after a month. Again, we are playing the fundamental dynamics of the market, the token inflation, and the fact that most altcoins underperform Bitcoin, Ethereum, and Solana most of the time. Now, I was thinking about this. How can I make this even safer for the people that don't want to watch the videos, that don't want to set up the trading themselves, that don't want to do the risk management themselves, that simply just want to provide capital? Let's say you've got a lot of capital, but you don't have a lot of time. For those people, I've set up a copy trading capital pool. So you can simply provide money to that pool and then automatically execute any trade that I'm doing as well. The copy trading feature is available for everybody that's on the annual membership. So you're also saving $250 per year on that membership. But the main feature is the automated copy trading, where you can get this return. And this has launched 2 weeks ago. And so far we are up 4.7%. And the very first days when I set this up, I didn't yet trade anything. And so that's why there's no trades, why this is going sideways. That's why the APR is actually lower in this estimate than what we're actually achieving. I hope to get this long-term above 50%. It was above 50% when I traded myself. Now we are moving more capital, so the APR can decline. But the target is at least 50% per annum. And so you can run the numbers for yourself, whether or not it makes sense for you to join the annual membership for premium. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.